Hey, how's it going, guys? This is Corey here at TradeWithBulls.com. Woo, that's better, guys. Let's get this started. Now, I know what you guys are thinking. Oh no, he's lost his mind. Why is he telling us how to lose money in the stock market when he should be teaching us how to make money? But yes, there is a proper way to lose money in the stock market. And no, I'm not talking about profits, losses, anything like that really. Nothing related to your income in the market. What I'm talking about is sportsmanlike conduct and your general mindset when you're investing. It's something that's very important. Not a whole lot of people talk about it, but it's something that should definitely be discussed. And the reason why this is so important is because investing in the market is something that's purely intellectual. So you've got to be able to keep your head on straight and remain thinking logically and not let any sort of petty emotions cloud your judgment. Before we get into the video, I just want to start by saying it is obviously entirely normal to experience strong emotions when you're investing. You know, emotions such as anger, pessimism, optimism, emotions that are both good and bad. But the important thing is being able to control these emotions so that your investments don't suffer. In order to be a successful investor, one of the very first things you have to do, the first thing, is you have to be able to separate money and emotion. You have to build up your mental fortitude so that when you experience losses, great losses or great gains, you don't get overly cocky and you don't get upset. And those sort of things, those two emotions in specific, breed erratic behavior, and they lead to you deviating from your investment strategy, which is not something you want to do. And this is something that you're not going to accomplish in a day, a week, even a month really. It's something that takes time to accomplish and to build up that mental fortitude. Now, I'm going to tell you guys a story. When I first started out investing, I started with a very small account, only a couple $1,000s in it, and one of my very first trades, I ended up losing about $400, and I didn't have very good mental fortitude. I got very upset, and this experience and my altered mental state actually led to a series of events where I experienced greater losses, because when you're not in a proper mental state, it really puts your money, your investments, your entire portfolio at risk, which is why all the time you see these hedge funders and high-level CEOs and investment managers, investment advisors that are just these solid, sedentary type people who can't be swayed. Perhaps one of the best shining examples of what not to do, how not to act, what not to be like is actually Jordan Belfort. Now, we've all seen the movie Wolf of Wall Street. We love it. It's inspirational. It's great. It's a rags to riches story, and it follows the life of Jordan Belfort. Now, it's going to be a bit controversial, me saying this, but Jordan Belfort is actually not a stock investor. Yes, he invests in stocks and he makes money in the stock market, but what he really is a salesman, and he convinces people to say yes. So he's a salesman, right? What he did was he sold stocks to other people via calls and telephone sales. And about halfway through the movie, you begin to notice that Jordan Belfort has developed an affinity for some quite unsavory things, such as prostitutes, drugs, all sorts of drugs. He's a bit of an alcoholic, and you can't be a successful investor if your mind is altered due to drugs. But this is something that he could afford to do because he wasn't the one sitting at a computer all day looking at stocks, options, and reaping in dividends. He was just he escalated himself to a tier where he didn't have to manage investments or anything really. I mean, you see half the movie he's just drugged out and doing all sorts of crazy things. And had Jordan Belfort been a real stock investor and not just someone that got lucky building up an empire around himself, he would not have made it. Now, if you look here, I've pulled up a image that goes over the 14 stages of investor emotion. You can see that it starts out with optimism, excitement. You invest in the stock, it goes up a little bit, and you think, hey, this is going well, I love it, I should invest every day, every second, I'm making lots of money. And then it goes into euphoria. That's when you're at the peak of the investment. You feel unstoppable, and then it begins to spiral down into the emotions like anxiety, denial, fear, desperation, panic, capitulation, despondency, depression. And then a bit later on, you begin to experience hope, relief, and again, optimism. Now, if you look here, you can see when you're experiencing euphoria, you're at the point of maximum financial risk. That's very true. When you're feeling euphoric, unstoppable, limitless even, you don't want to invest. It can be very dangerous. You will make mistakes. And to be quite honest, you're gonna make mistakes when you're starting out. You will invest when you feel euphoric, and you will learn from that. You'll lose a bit of money, but with each mistake comes experience, and with each experience comes knowledge. Then you see over here, near despondency and depression, that it says point of maximum financial opportunity. Now, I think that's absolutely wrong. When you are depressed, in a bad state of mind, where you're experiencing any sort of anxiety or fear that the investment will not go how you want it to, it's also just as dangerous as being in a state of euphoria. You don't want to invest during either of those states. You need to be able to manage your emotions. You need to sort of take a step back and analyze your investments on a more logical level. Like I said earlier, you need to separate emotion from finances, and that couldn't be more true. When you're depressed and you're thinking that the stock that you invested in isn't doing so well, and you're telling yourself, I better get out right now, I'm going to lose so much money, that actually is possibly not true. I mean, it really depends on the stock and the investors and the sort of news that the investors are experiencing. And all I'm really trying to say here is just don't invest when you're too happy, too sad. Investments are something that you should be, or at least act, a bit indifferent towards. And then you see here, this, wow, I feel great about this investment, and then, near denial and fear, temporary setback, I'm a long-term investor. Maybe you were trying to short the stock, or you invested in an option, and you're like, okay, well, I'll just let the option expire. And then you see here, maybe the markets just aren't for me. Okay, now that's the little voice in your head. That's, the little micromanager that's telling you all these things that you don't want to hear. That you have the devil over here, you have the angel over here. You sort of just want to flick them off. You don't listen to them. So, if you're thinking about getting into stocks, or you are already an investor and you're putting your money into the stock market, I would recommend, in order to begin building up that mental fortitude, check out Paper Trade by TD Ameritrade. They have an app called ThinkorSwim, and you can actually log in and create an account, and they will give you an account with fake money in it that you can invest into the stock market. And these stocks, the prices on them are a bit delayed by about 20 minutes, but you'll still get a very real experience of what it's like to invest in the stock market, and you can begin to learn a lot about stocks and see how stocks move and how stocks react to different sorts of news. You can even invest in options with the paper money, and you can download it on your phone or on your laptop, your computer, your desktop, whatever. It's on all devices, and it will also build up some experience with the platform, at least the ThinkorSwim platform. It will give you some experience with placing trades, opening positions, exiting positions, and that's very important because there will be some instances when you're investing that you need to place a trade very quickly or get out of a position very quickly, and this will just build upon your skill set for the day that you begin to trade with real money. So basically what we're just trying to do here, guys, is build up your skills, build up your mental fortitude and your mindset, so that when you start investing, your risk is already very limited because you've been practicing trading. You're somewhat intermediate, you're a bit seasoned, and that will do a lot for your investments. So guys, I hope you enjoyed the video. That's really all I have for today on this topic. If you have any questions, make sure to comment down below and I will get back to you on that. And I'm actually going to be making another video here pretty soon that will go into the platforms that you can trade with, and I'll do a couple tutorials and show you guys how to place a trade, how to start your own paper money account with TD Ameritrade. And if you haven't already, leave a like, comment, subscribe. It really helps me out and tells me what you guys want to see and how I'm doing with the videos. So that's all, guys, and have a great day.